Two of three most common way you would invest your savings is what I call personally owned real estate. And by that I mean, you're like, hey, I don't like the stocks and bonds game. I don't trust those guys in the financial district down there. Main Street's always trying to take advantage of, or Wall Street's always trying to take advantage of Main Street. I'm going to go do something on my own. What else can I do? Well, you can go buy real estate. Real estate is probably the other most commonly invested in asset class. I call it personally owned real estate because there's a lot of ways you can buy real estate. You can buy real estate, just go out and buy it yourself with a loan. That would come in form of, single family homes or maybe multifamily homes up to 4 units. I specifically say 4 units because you can go up to 4-unit multifamily with a conventional loan, which is most likely what you're going to want to be doing. Once you go beyond 4 units, you're a little bit more in a higher category real estate investor. You got to get commercial loans. It's a little bit of a different game, a little bit of a different calculus. So personally owned real estate, single family homes that you rent, or multifamily up to 4 units, and you just go buy them yourself. You have a down payment. It's just like buying a house for yourself, except you're not going to live in it. Now, actually, with that in mind, I want to say that I consider your first real estate investment, or what should be your first real estate investment, is your own home. This is, an age-old debate: owner rent, owner rent, owner rent. I've done a lot of math on owning versus renting, and most of the math I've done shows that you should own. And really, when you own your own house, you are a landlord, but you're also just the tenant as well. That's how I look at it. And I even calculate the return on my home as if it's a real estate investment, with me being the tenant. And I'm the greatest tenant in the world because I don't complain and I always pay my rent. Now, owning versus renting can be debated specifically right now a little bit more vigorously because interest rates are so high and historically home prices are so high. And I do think that if you're going to buy your house that you live in, you want to do analysis on it. You want to, see that it's going to turn out financially to be a better deal than you renting and enduring continual rent increases over time. So there's a way to do the math on that. I have a video about it. And as you can imagine, in addition to the interest rate being a factor, where you live currently is a factor. If you live in Los Angeles or New York or a big city, you're paying a lot for real estate. Renting, who knows? It may possibly be the better bet. It's not to say you shouldn't invest. Maybe some people do rent and then go buy rental properties in other states and other towns where the numbers to own rental properties are more compelling. Or you find another way to invest in renting, i.e. stocks or bonds in the public markets, and so on. Now, for me, historically, I've invested mostly in real estate, and I think, in my experience, real estate has provided a superior return for less risk, in my experience, or my opinion and experience, over stocks. So I kind of went down the real estate road. I bought my own house. I bought a building for my business. I owned up to, I think, at one time, 10 single family rentals, and it worked out. But interest rates were lower. I was buying properties, from 2010 up to 2017. I'll be honest, the cash flow on them was always hit or miss, if not more to the miss side. And I made most of the money I made with them through equity growth, through appreciation. The reason real estate appreciation is so potentially compelling is the leverage. You get significantly more leverage than you can get in stocks, and it's safer leverage to have than if you try to get leverage in stocks through margin or whatever.